Hello, hi, testing 1, 2, 3. Okay, good evening, everyone. Thank you for making the time today. We'll be starting our seminar shortly. All right, so we are going to start. Hopefully, everyone is already ready. Okay, so I'm sure a lot of us are here today because we are very curious about Ant Group coming up. There's actually been a lot of seminars, so which is why we have actually chosen this topic to talk about today. Just a basic introduction. My name is Athena, your speaker for today. Previously, I actually worked as a teacher for a few years in MOE before joining the financial sector. And today we'll be discussing the basic mechanics behind IPOs and how they work. So, one of the reasons why we chose this was recently for the past few months, we have a lot of clients who have been calling, emailing, asking us regarding, the Ant IPO. When are we going to launch it? Are we going to launch it? How are they going to subscribe to it? So many questions, and I felt that it will be while clients are very excited about the launch, which is a great thing, we want to introduce the concept behind IPOs before our investors make their informed decisions. So there'll also be a Q&A session at the end, so feel free to voice out any concerns then. All right. Okay. Okay, so this is the content for today. So first of all, I'm going to introduce what IPOs are and how they work. Basically, why they are so sought after by companies as a milestone for their growth, and also why investors sometimes flock to subscribe to IPOs. After that, then we'll be looking at what it implies for the company and the investors as well. And I will also be sharing 4 case studies of different IPOs, one of which is actually the most anticipated Ant Group IPO that is coming up. Should be in the next 1 to 3 weeks. We don't have a definite date yet. All right, so please reserve your questions for the Q&A session later, and I'll do my best to address them. Okay, so basically the fundamentals of an IPO is that it stands for initial public offering. Basically, it is taking an entire company, cutting it into many pieces of shares and selling it to the public. So whoever buys these shares, they essentially own a big portion, they actually own a portion of the company. And some of these shares actually have voting power, which means that they actually have some degree of control over how the company does its operations on a day-to-day basis. Okay, so um, why companies actually want to do IPO launches is once they actually have an IPO launch, they kind of enter the big league and they achieve a more atas status. So all the stocks that we trade over the world, right, started off at the same place, which is the IPO launch. These IPO launches are actually the first batch of shares to be sold on the open exchange. Okay, and investors who feel that the value of the company will grow, right, will subscribe to the shares to make a profit by selling the shares when the share prices increase. So basically, if you own a share and you're a shareholder, you own a portion of the company. Okay, so the steps behind launching IPO is actually very tedious and very arduous through many checks because the company has to be accountable for the funds that the investor puts in. Okay, so first of all, the company have to actually hire an IPO team that consists of writers, lawyers, certified public accountants, SEC experts to undergo a formal agreement, right, to compile this documentation called the S1 registration statement. And this statement is actually include a lot of preliminary information about when they expect the IPO to be launched. It is often revised throughout the process, which means whatever the document whatever is written on the document at a point in time can be revised over time continuously, and marketing materials are also produced for this pre-marketing of the new stock insurance. So if you Google online, right, Ant Group IPOs S1 registration is actually already out. If you are free, you can Google and take a look as well. Okay, so after this process, filing the registration, then the company will establish an offering price where they estimate the demand and make revisions to the IPO issuance date, which is why you always see headlines like, IPO valuation at this, target valuation at 10 billion, 5 billion, 6 billion. These are kind of managing expectation and giving kind of a market value to give investors a better idea. Okay, so then the board of directors is actually there to ensure the processes for the reporting, financial and accounting audits are transparent and very clear, such that there is no sketchy things going on in the accounting books. As you can see, right, the process of bring a company from privatization to IPO going public, it has a lot of there's actually a lot of accountability there. So when they have to bring a lot of all their books, their balance statements, their income statements, their balance sheets, all these, they have to make everything very transparent. And so they have to ensure that all these are in place. So only after many, many rounds of these thorough checks and scrutiny by the general public and all these lawyers, accountants, right, then finally IPOs are launched. Okay, so what does this rigorous processing of the IPOs and launch mean? Well, basically, although it's a lot of trouble for the company to go through, right? A lot of companies are still willing to do it because it means they have access to the entire investment community to raise capital. Basically, they're opening up their pool of investors from a small private group to the whole world, whoever has access to buy stocks and shares. So, and they're actually able to kind of borrow this money from investors for a very low price. So it's actually a lower cost of capital for equity and debt as well. At the same time, whenever a company is listed, we hear about it all the time. It improves a company's branding and reputation. So often it gives investors and the general public that, wow, this company is big enough to have its own shares. It actually gives a very good brand image as well. At the same time, once a company is listed on an IPO, its credibility increases a lot. So a lot of times they're actually able to get better loan rates from banks as well. However, as you can see, right, through this rigorous process, a lot of ongoing costs, there are legal, accounting, and marketing as well. And they have to ensure that their books are very clean for at least the past 2 years. And what the problem is that once you actually offer your company up to all these investors, you have already sold it to the public, which means that your company is essentially no longer yours. And another issue is once these companies actually release their income statements, their balance sheets, right, a lot of their trade secrets can actually be revealed, where they look at the inventory and look at the raw materials, all this. So there are certain companies in the world, actually quite a lot of companies in the world that have chosen to remain private, a few of which I'm sure you've heard of before. For example, Philip Capital, our company is one. Um, Up until now, our CEO and chairman, we prefer to keep our uh, be the people who make our own decisions. We do not want to be accountable for the decisions of our shareholders. So same things as big companies such as Huawei, Chrysler, Far East, IKEA, Ernst and Young. These are big companies that they want to have their own say in the direction of their company. They do not want to, be accountable to shareholders who actually have put money in. Okay, so the implications, right, for the Hong Kong IPO, I'm going to be actually focusing on Hong Kong IPO for today because the main focus, I would say, eventually when we zoom in at the end, is actually the Ant Group IPO. That's actually, I'm sure a lot of our investors, what they actually look forward to the most today. So the implication for the Hong Kong IPO, I would say the first barrier and the highest of them all, right, is actually the minimum capital of $250,000, which means in order to subscribe to the IPO, right, you need to have at least 250K Sing dollar inside your Phillip Capital account. Okay, and that is only the first step. If you would like to subscribe to the IPO, you need to convert these 250K Sing entirely into Hong Kong dollar. So depending on how the currency fluctuates, you will be definitely be taking some kind of currency risk as well. And there's a lot of speculation going on regarding, what is the starting price of the IPO. And I would say the biggest issue for a lot of investors, even if they have the capital, is that subscription of shares is based on a balloting basis. So it's like your BTOs. If you get it, then you're lucky. If you don't get it, then too bad. Even if, let's say, an investor can have 1 million or 2.5 million or even 3, 4, 5 million, if they are not that lucky, maybe eventually they can only subscribe to a few hundred shares. Okay, so in Singapore, we also do have our own IPO. So in order to apply for own IPO, it's actually very simple. You can either go to any one of the ATMs to apply, or you can go online to your iBanking from any of your banks. So usually for an IPO, right, they would make it a lot easier for their own native citizens to subscribe to it as opposed to foreign ones, which is why we have a lot of Singaporean investors all scrambling to ask, hey, how are we going to apply for an Hong Kong IPO that is overseas? All right, so we will find out more about that later. For now, right, while the news, I would like to say a word of caution is that while the news of IPO generally creates a lot of buzz and hype among the investment community, right? They do not always equate to profits. Because as investors speculate on the profitability of the shares, they also face the prospect of profits or the risk of loss. So as you know, in the investment world, right, the higher the amount of profits are looking at, the higher the risk that you might lose some money. Okay, they're actually pretty well correlated. So we'll be looking at 4 examples in the next section, right, where we explore different kind of case studies. Okay, so fun fact, right? I've actually chosen a unicorn icon here because the companies I've chosen for the case study today, right, are actually categorized as unicorn companies. So unicorn, right, is the term in the venture capital industry to describe a startup company with value of over $1 billion. So a lot of popular unicorn companies that you might have heard of before will be Airbnb, Uber, Sophie, Xiaomi. Okay, so this unicorn, so in order for a company to achieve unicorn status, it must generate enough investor demand for them to be able to even reach that kind of 1 billion valuation. Okay, so this unicorn term, right, has been widely used to refer to startups in the technology, mobile technology and the IT sector, usually at the intersection of three. So usually it's all those very IT, very all those more of like fintech or technical countries. Okay, so today we're going to discuss these 4 unicorn companies and how their respective IPOs turn out, or what we think they will turn out. So our first unicorn that we'll be looking at is SoftBank. One of the main reasons why I chose SoftBank, right, is because it's the second biggest IPO in history. The first is actually Alibaba. However, for the context of today, right, I did not choose Alibaba because it's actually the parent company of Ant Group, which is what we're talking about later. So for a bit more diversification, I decided to look at SoftBank, and also in terms of the different kind of markets, there will be a more variety for the case studies for us to look at. So basically, SoftBank Corporation, right, is a spin-off child group of the SoftBank telecommunications company in Japan. Okay, so the SoftBank Corporation, which is what we're looking at today, is actually mainly doing selling phones, as you can see from here, and is actually Japan's biggest IPO at just 1.5 billion 1 billion shy of Alibaba's IPO record of 25 billion in 2014. So all these mega IPOs, right, the criteria for unicorn might be 1 billion, but a lot of the times the valuation can exceed 20, 30 times of that. And for Ant Group, Ant Financial, we can say that it can even exceed that of Alibaba as well. Well, that's a lot of expectation from investors as well. Okay, so due to the increase in demand for these SoftBank shares, right, the amount of stock sold was actually increased by 160 million, just so to meet the investment demand. And the starting price when it was first launched was about 1,500 yen per share. So this is mainly the difference between SoftBank Group and SoftBank Corp. I've actually written in the different ticker codes for your reference in case you get them confused, because even for me when I was doing my research and everything, I also always get it confused. So just remember, SoftBank Group is the parent company, SoftBank Corp is the child company. Okay, and the SoftBank Group is the one that is in charge of the telecommunications in Japan, and is also the one that goes around to invest a lot in startup companies such as WeWork and a lot and Alibaba and also Ant Group as well. Okay, so SoftBank Group is the parent, SoftBank Corporation is the child. So a bit more background of SoftBank Group is that it's actually formed by father and son, and is the 36th largest public company in the world and the second largest publicly traded company in Japan after Toyota. Okay, so let's look at the launch of SoftBank on its first few months. So as you can see, right, on the very first day, the target was actually 1,500, but actually it dropped quite a bit to 1,282 yen where closing on the very first day. So if you were an IPO subscriber on that day and you actually managed to subscribe to the shares, or you actually bought shares when the market opened, and at the end of the day you dropped, you have been a very depressed investor. You will be thinking, oh no, there's so much hype for this, there's so much hype, so much hope. Why did it drop? Well, a lot of times, right, you can't really look at just one day. You actually have to look at the data over a long period of time, because for investors, we always have, investors look at short horizons versus long-term horizon. So if you're an investor and you're actually looking to, hold the shares for a short period of time, for maybe let's say 2 or 3 months, then you would have made a profit at about uh, at about 1,450, around there. However, actually, right, if you're able to hold it to last year in October, you have been able to make about 300 yen per share. But if you look at the overall pattern, I would say that because of the various fluctuations here and there, right, it really depends on when you let go of the stock and when you actually entered. So while a lot of investors might feel that, oh, the media is going crazy over a certain IPO, I think that it will go very well. Well, investors should actually be mentally prepared that at the start, right, there might be some volatility, and you have to be prepared to hold the stock until it becomes more stable, as you can see on this graph, from at least maybe June until from June onwards. From June onwards, the price is slightly more stable, given that the dip this year in March, April was due to COVID. Okay, so the analysis for SoftBank Corp price, right? One good thing is that it's not really highly correlated with SoftBank Group, the parent's share price. So actually give investors an avenue to diversify. At the same time, if you look at the overall trend, it's generally a profitable stock to hold, provided you bought it at the times where the stock actually dipped quite a bit. Okay. But however, there are some issues with the fluctuations of the stock, because SoftBank Group, the parent company, shares the telecoms market with rival Docomo. At the same time, there's always a struggle between the Masayoshi father and son pair. So whenever those kind of news surface, right, definitely it will impact the stock for SoftBank. So from this, right, we actually can see that not only the reputation of a company influence the share price, but the image of whoever is running the company is also very important. And that will become even more evident when we look at our next example, WeWork. Okay, so the reason why I've chosen WeWork for the next example is because WeWork started off as a very promising company. So, for those who have not heard of WeWork before, basically how the company operates is that it will rent or buy an entire building, and it will actually cut up the entire building into small office spaces for those kind of very small or medium-sized companies to rent out an office space. So for a growing company or just a startup, instead of renting out an entire office, they can just maybe rent one or two cubicles, and that decreases their starting cost of capital a lot, which is why at first this business model booms. Okay, it at one point of time, right, it actually managed over 4 million square meters. And when they actually filed S1 filing, it stated that it has visions of 3 trillion in revenues. So you can see that there was a lot of confidence from the company and the CEO Adam Newman that they felt that they were going to succeed. Okay, so at one time, right, we would have more than 5,000 employees in over 280 locations, and the valuation was stated as 46 billion. However, at the point of time, the Wall Street Journal noted, upon the release of the public prospectus, right, that the company was under a lot of criticism over the governance, business model, and ability to turn a profit. So why is it that a company that looks so promising on paper was being criticized by a lot of all these financial journalists? Let's take a closer look. Well, for one, if you were to Google in Adam Newman WeWork, it would be a lot of controversy. So basically, you can see that uh, the public image of Newman isn't very pristine. So it actually impacted the IPO launch by quite a bit, to the extent that towards the end, SoftBank, one of its major investors, actually had to step in to remove Newman as the CEO. So now let's look at the timeline of its IPO. So in August last year, it actually filed S1 paperwork where it stated all the balance sheets and it projected revenue of 3 trillion. But if you look closely at its profit and losses report, right, it actually lost about 4.3 billion in 3.5 years, which is actually quite a big chunk of losses while we look at the operating costs. So because of all the I would say all the controversy behind Adam Newman's very eccentric behavior, the IPO was actually postponed until end of the year, and SoftBank removed Newman. And then in late September, things just went downhill from there. They had to sell off 3 businesses and was actually looking to let go about almost half of its workforce. Okay, eventually, SoftBank took over entirely and gave Newman a very handsome payout. I think it was a few million or a few billion dollars. Okay, to step down as the board chairman, so that SoftBank will be the company that have the final say in everything. And in November, however, the company did even worse and actually laid off about 40% of its workforce. So eventually, until now, I think none of us has heard about WeWork's IPO opening. So sadly, WeWork just didn't work at all. And from a very promising unicorn status, it became a company that no one wanted to invest in. All right, and let's look at further analysis of why it didn't work. So first of all, if you were to look at the revenue and net losses, right, which is the blue bar against the red bar, from just one glance, you can tell that the area of red is a lot higher than the area in blue. Even if you do not look at the numbers, it's actually a very stark kind of contrast. So whenever we want to look at how promising the IPO is, we highly encourage investors, right, to do some background checks on the profitability of this company for the past few years, because that will determine, how profitable they are going to be in the future. Okay, so another reason why WeWork didn't work right is hugely also because of Newman's eccentric behavior that caused a huge loss in investor confidence, because investors don't see him as a very responsible and a steady uh, source of leadership. They felt that this company might be a little shaky if Newman is up to his antics again. So there was actually a lot of conflicts between the investors and management as well. At the same time, WeWork also expanded very fast, and it caused a lot of cash flow problems, which is why you can see the losses. And the bad reviews online also affected their occupancy rates. And for this kind of companies, reviews are everything. If you have bad reviews, then most likely nobody's going to rent the office spaces. The same kind of logic applies to Airbnb. So all this, if actually you as an investor, you have actually done your background homework, even if let's say WeWork were to launch, we would say that it wouldn't be a very promising IPO launch or a very promising stock to hold on to. So a lot of red flags here and there. And I would say the main reason why I chose this unicorn, ex-unicorn company to start off as one of the examples is also as a word of caution for investors is don't blindly just look at the literature written online by specific journals. Take a bit of time to really look at what is behind the company and then make your financial decisions. Okay. So the next unicorn we're looking at is actually called Beyond Meat. It actually caused a big, I would say, a big sensation a few years back because it's the biggest IPO pop in US history since 2000. Okay, I will explain why is it the biggest IPO pop later on. So basically, Beyond Meat is atas mock meat. Okay, is vegetarian meat substitute that bleeds like real meat, which means that if I take the sausage and I cut into it, or I take the meat and I cut into it, apparently blood-like substance will come out that is not blood. Okay, and the reason why they were actually able to come up with this Beyond Meat is because the founders spent about a decade in the lab to get that perfect mixture of soybean and pea proteins. So obviously, a lot of vegans went crazy over this. The IPO initial valuation, right, was about $25 per share. But what happened after this took the investment world by storm. So basically what happened was that at 9:30, right, all hell broke loose. Investors went nuts to just buy this newly trading stock, and the shares opened the day up 84%. Okay, over the next 6.5 hours, the shares of Beyond Meat traded hands 23 million times. So it means that 23 million transactions were made just in one day for that share. Most stocks don't even trade that much in their entire lifetime. Okay, only the very successful ones do. But for this particular stock, 23 million transactions in one day. We're not even counting the number of shares. That's how volatile and how quick the stocks for this change hands on just the opening day. Okay, so at first it was valued at 25. The market, the first trade when it opened, right, was at $46. Then at, at the end of the day, it closed at 65.75. So as you can see within a day, right, it actually jumped almost 3 times of its initial price, and it makes it the best performing first day IPO in nearly 2 decades. So this is why it's called biggest IPO pop in US history, because it managed to increase and jump that much in one day. So basically investors were going nuts on that day because the stock just kept rising and rising and rising. But that is just, on the first day. What if we were to look at it from a longer term horizon? Okay, so I'm not sure how many of you listening in actually bought the stocks last year in May, but if you did, well, you must be a very rich person now. Because if you were to look at less than 3 months later, at first, right, it went public at 1.5 billion valuation. 1.5 billion is quite little compared to SoftBank and WeWork's initial valuation. However, less than 3 months later, it was worth more than 13 billion. There was actually a 859% explosion from the initial price of $25. So as you can see, $25 at first, the highest peak it reached is probably about $230. That's for a stock, in 3 months, that's pretty insane. Okay, so very few people saw it coming. Unless you're a hardcore vegetarian, you probably never heard of Beyond Meat before. And I also have not heard of it before, honestly, before I did this presentation, I did the research. So today, right, is basically a household name. A 9 times return, right, in under 3 months will grab any investor's attention. And if let's say you put in 10K investment at first, it will balloon into about 52K in 12 weeks, which is about 3 months. So in 3 months' time, you like your money will like go up 5 times of its initial value. So let's look at an even longer term until December. As you can see, right, actually peaked about 230 $240, and it's been more stable nowadays. So if let's say you were to be an long-term investor, right, it actually would not have gained as much profits for you as you would have thought. So I would say the reason why I chose Beyond Meat following SoftBank is that SoftBank would be more of a long time a share that you hold for a longer time horizon, where Beyond Meat, right, if you look at the charts, it's best if you hold it for a short term like 3 months. So but then again, we never know how the market falls and drops, right? So I would say that the moral story for Beyond Meat or for SoftBank or for any IPO in particular or any shares in particular is once you have actually purchased a share, set a target for yourself as to how much profits you would like. And once you have hit the profit target you're looking for, it will be good to close off your position and just liquidate off the share. If let's say you were greedy, let's say I'm an investor, I actually bought Beyond Meat towards end July because I thought the price can go up even more and there's so much hype over these shares, then definitely I would have made a bit loss because as you can see, it's a downward trend from there. So really, timing of when you purchase the shares matter. IPOs, they can be overhyped, they can fail, like in the case of WeWork, but they also can be very successful in the case of Beyond Meat and SoftBank. You just need to really look at the background of the company, know what you're buying, and then make an informed decision. Okay, so right now the last unicorn we are going to look at, I think the most anticipated of them all is the Ant Group IPO. So as we all know, right, this Ant Group IPO is actually the most valuable of them all. Remember earlier on when I said that Beyond Meat was only 1.5 billion? Well, this one is 100 times of that. Sorry, is it 100? Yeah, 100 times of initial valuation of Beyond Meat. Okay, so what is Ant Group? Ant Group is obviously created by our very famous billionaire, multi-billionaire, Jack Ma. He actually operates Alipay, the world's largest mobile online payment platform, as long as you are about, which is the world's largest money market fund. So it actually provides a lot of these fintech services to basically the entire Chinese consumer base, which is a huge population, which is why it explains another reason behind its success as well. This huge consumer base has become very accustomed to doing everything over the Alipay platform. Its only competitor in China, I would say, is WeChat or Tencent. So with this lack of, I would say, competition, we would say that Ant Group so far has done very well into capturing the huge consumer base in China and offering different kind of financial services for business to business or business to consumer. They are very well diversified as well as okay, so for example, Ant Cash now and Ant Credit Pay basically allows every every Chinese consumer who have the app to be either a borrower or lender. For example, I have $100 spare cash that I want to lend it away, and then what the app will do is that it will match me with a borrower who wants to borrow $100 from me, and I will get a cut of the interest from them. So a lot of innovative ways that this Ant Group has done to diversify itself and to keep it a lot of innovative touch to keep it modern and come up with new convenient ways to capture the consumer base in China. So if we were to just Google Ant Group IPO, this is a screen grab from just today. As you can see, right, the new funds raised 8.9 billion within days. Whenever I Google Ant Group IPO, or I'm sure many of you have done it already. Whenever you Google Ant Group IPO, it's always a lot of hype, always a lot of, I would say, speculation, a lot of investor confidence that it is going to turn out very well. Okay, so a lot of people, a lot of rich people betting on the success of Ant Group IPO. So before we all get too overly excited, let's look at a bit of the background research first. Okay, so as I always emphasize on, please do our research first. So Ant Group, well, is the number one and largest everything. Okay, it's the largest online consumer credit service, largest online investment, largest online insurance, largest digital payment platform. So a lot of services, right? All the services in the Chinese market can be accessed via Alipay. So there's this very connected network that offers very convenient financial services for all these consumers in China, which is why it was actually able to target the try right now is about 150 billion. The target is 225 billion. With still a few weeks to spare, it will be quite interesting to see whether it can really hit this valuation or not. So I would say that the backbone of Ant Group is the total domination of all these Chinese payment markets through Alipay. Without Alipay, right, I can say that Ant Group wouldn't be as successful as it is today. And once Ant Group is launched and all the funds coming, because once you launch the IPO, a lot of funds are going to Ant Group, and Ant Group definitely will take this money to go and do a lot of upgrading of system and to expand its businesses. It has the potential to become the world's fourth largest financial company. And I have emphasized many times, huge advantage of massive consumer base in China. So this slide basically is talking about the good things about Ant Group. At the same time, we always need to look at, what are our risks. So the areas of concern is that although Ant Group has a close link with Alibaba, which is the parent company, it has a lot of overlapping user bases. So one of cause of concern is whether there's going to be any cannibalism in the profits or clientele. At the same time, because of Alipay's far reach in this fintech market right now, the Chinese government is actually trying to curb and control Ant Group's hold on this domestic digital payments market. Okay, and if you actually go to Google their prospectus online, it's pretty lengthy. What actually kind of worries me is that there's a lot of pieces of crucial information that they redact, which means they actually blacked out and you can't see. So hopefully, eventually, after the IPO is released, we can actually get the prospectus without the redacted information. But for now, I would say that this IPO is not as transparent as some investors would like. And another problem that is ongoing right now is the rising tension between Trump and the Chinese tech firms. As we all know, Trump has been very harsh on Chinese tech firms such as WeChat, TikTok, and Ant Group, after having such a stronghold in China, it definitely needs to expand overseas. And US is one of the markets that they desperately are trying to, go into. So even if, let's say, after the IPO, things go well, they have the funds, they might face a lot of political resistance from Trump and the US side, and that will definitely impact the price of the stocks in future. Okay, so I'm sure a lot of burning questions in our clients' mind are mainly these three. Okay, so we have been receiving a lot of calls, a lot of SMS. So these are the top three questions. Number one, how to buy the Ant Group IPO. Number two, when can buy the IPO? Number three, I would say the top worry is, what if I don't have 250K? Because honestly speaking, for an IPO, 250K is not a very accessible a criteria for most of us retail investors. Okay, we don't have that kind of big money to throw into an account, let it stay there, and subscribe to a share that we don't even know whether we will get or not. All right. So luckily, we have solutions for you at Phillip Capital. So what happens is we have actually a pretty big counterparty in Hong Kong that allows us to offer the pre-IPO. And we are Singapore's first broker to offer this pre-IPO as well. So what is the pre-IPO? The pre-IPO, right, is a market channel that we provide for clients to trade in the Hong Kong shares one day before they're listed in the Hong Kong exchange. So it's like an exclusive pre-screening of a movie that's going to come on the cinema soon but not out yet. Okay, so the performance of the stocks in this pre-IPO trading session should not be considered an indicator of the price and demand in the official trading session. During this one day of pre-IPO, right, you are allowed to buy and sell the share as you can on a normal trading day. Okay, so it's just like a normal trading day, just that you can do it one day before, like again, like an exclusive movie screening. Okay, so what are the implications for this Hong Kong IPO? So remember earlier on, I would say that a lot of our investors, their main worry is 250k. And even if you have 250k, the next worry comes, what if I don't get the shares? I convert all my currency to Hong Kong dollar, I still don't know whether I can subscribe to the share or not. And when we look at, the hype and the demand for Ant Group, I can tell you very honestly that as a dealer, um, with so much demand and that limited kind of supply, your chances are really, really not that high, considering that a lot of shares are actually being bundled up in China right now, available for native Chinese mainland consumers already. So whatever will be available to us foreign investors, right, would be pretty much the leftover shares. Okay, so the good thing about pre-IPO is that there is no need for 250k. There is no minimum criteria for funds. You can put in 1k, 2k, 10k, 50k, not an issue. And there is no more luck element. You want to buy 50k worth of shares, just look at the market price. You'll be able to purchase whatever amount you want on that day. Okay, but please note that because it's like exactly like a normal trading day, there's definitely going to be fluctuations in the prices here and there. All right, so when is the settlement day? Same thing is like a normal stock and share, which is T+2. You can choose to either settle through Hong Kong dollar or Sing dollar, which means you don't have to convert all of your currency into Hong Kong dollar just to subscribe or buy the share. You can actually put 10k Sing dollar inside, settle all your currencies in Sing dollar, and you'll be subject to less, I would say less speculation and less uncertainty. We also offer the usual brokerage rates. There is no additional pre-IPO fee or additional charges. No, you also can do contra trading. The only limitation is that you cannot have CPF settlement. Okay, so for the trading hours, it goes along with the same as a Hong Kong session. For clients who actually really want to trade all this information, right? You can actually find this exact information on our website. Just look under markets we offer and Hong Kong pre-IPO. So right now, we are I would say as enthusiastic as all of our investors to actually offer this IPO to our clients. However, unfortunately, we do not have a specific date because we're also still waiting for Ant Group there to give us an exact date of when they want to launch this IPO. Is actually a very I would say the date might change here and there because there's certain I would say there's a lot of market movements going on at the moment. Hopefully once they announce, they settle down, and all of us will have a better picture and a clearer idea of exactly when we can start investing in. I personally have a lot of friends and family who are actually looking at this IPO, already created the Phillip Security account, already put money in, just waiting for the launch only. So for those who are already waiting and the money sitting there, you want to do something about it, what I can recommend is to actually look at Alibaba shares. Okay, so as we all know, right, Alibaba is the parent company of as we all know, right, Alibaba is the parent company of Ant Group. So there's actually a pretty good correlation of their shares with Ant Group. As you can see from this graph, if I were to draw a straight line from the dip in about mid-March all the way until now, it's actually a very positive upward trend. Okay, so basically, right, all these fluctuations is very closely linked to the news of Ant Financial's IPO launch. It's very that a lot of people who feel that they are not sure when an IPO will launch, they're actually placing their bets in Alibaba. They actually purchase some Alibaba shares. So for example, if you few of the more perceptive ones and got the Ant IPO share somewhere in late September at about 270 Hong Kong dollars. That's about 55 Sing. Right now we have grown up to about 60 Sing already as of today's price. Okay, so actually Ant Group, Alibaba has the potential to definitely go past that 300 Hong Kong dollar mark. It's just a matter of when and how. So we are pretty sure that once Ant financial IPO is launched, the price of Alibaba shares will go up as well. Since they're interlinked, there's going to be people who cannot subscribe to the shares. They'll look for alternatives. So Alibaba will be a good stock to hold about a few weeks ago. Right now, I would say that the price is slightly inflated. So if you see the price going down a bit, maybe about 290, 280, or even 270, that actually will be a very good time to buy. All right. So for those who don't have an account yet, you can open an account through MyInfo. The process takes about 5 to 10 minutes. I've actually tried it before to help a client out. It's very, very convenient. You just have to click, for Singaporeans, just click on MyInfo. It will print most of the information for you and just have to confirm a few things. Okay, and the best part about opening a Cash Plus account now is that you get 5 free trades. And for our Hong Kong fees, they are actually, if I'm not wrong, it's about 10 or 20 Hong Kong dollars. I'll check into that later. Wait, sorry, I actually have it on the next page. Yeah. Okay, so for Hong Kong dollars, right, we actually recommend, for Hong Kong stock market trading, we actually highly recommend our Cash Plus account. Is because our Cash Plus account offers the lowest and cheapest brokerage of all of our accounts. As you can see, the minimum for our Hong Kong trading, right, per trade is 80 Hong Kong dollars. You divide by about 5, that's about 16 Sing. So it's the higher of either 0.1 15% or 16 Sing. Or if let's say you're planning to invest a bit more, then it's even cheaper. So it's progressively get cheaper. And there's also order amalgamation as well to ensure that you have the lowest brokerage cost for all your trades. Okay, so for those who are actually looking into going to Alibaba shares, if let's say you feel that the stock is if you feel that the stock might go down or the stock might go up, it's actually a very good time to play the volatility with CFDs, which is contract for differences. Right now we have a very good promotion, which is a $88 cash rebate. So if you want to find out more, you can look at our website. So I would say that Alibaba would be a stock that's pretty volatile according to the kind of news that we see all the time. So again, please do your homework first before you make any investment decisions. I often have clients coming to tell me that they want to buy a stock. And the next question was, can you tell me more about this stock? What do they do? Okay, as investors, the money is yours. Please make sure you do your homework first before you put your money into any kind of shares. Okay, so in order to trade CFD, right, you actually need to complete an online assessment. If let's say you cannot meet the online assessment, don't worry, there's an e-learning to teach you how to do it. After that, once you're done, you can just email us the completion cert. All right, so these are actually all the references and all the research that I've done and the disclaimer for our session today. So if let's say any of you have any questions, feel free to email me in. I'm actually one of the TQ dealing team. I'm mostly in charge of accounts that are opened online So my day to day is helping clients to put across their trades or giving them some investment advice on what stocks are good. At the same time, if you have some time right now, I really appreciate it if you can give me some feedback so that I can improve on my future seminars. Okay, so I think next we'll be coming on to our Q&A session. If you have any questions, you can actually write inside our chat group. Okay. Okay. So let's answer one by okay. Not all questions will be answered. We will try to answer most of them. Okay. So okay, give me a moment. Okay. I think the first question we can address is first question: should we buy Ant IPO? Okay, from my time as a banker in UOB, right, I would say that different clients often have different needs. So my first question back to you is, what are you looking for to invest in this portfolio? Is it for long-term investment gains, or is it for short-term volatility gains, or is it for something that you know that for example, I will always recommend clients to have a portfolio that diversify their risk, because right now I would say that the demand for NIPO is going to be very high, and as we all know, with high demand comes higher price. Are you willing to forego the short term uh, cash flow tightening to look for future gains? And at the same time, there is no guarantee that NIPO definitely will go up. Stocks tend to be volatile, as you saw in Beyond Meat and even SoftBank, that it's not always going to make a profit. It depends on when you are able to let go. So a lot of it, right, will actually depend on your holding power. So whether you should buy or not, you should, the first of all, you should look at your risk profile. What kind of investor are you? Are you a very risky investor, or you like to play it safe? If you prefer to play it safe, then I would say that the Alibaba shares might be a safer option for you, because that is something that might be cheaper than Ant Financial, because right now the price of Ant Financial is totally, we have zero data on it. But at least Alibaba is a price that you can see. There's historical data where you can actually see a trend. So actually, if you do some market analysis, you might actually find a good place, a good timing to actually start buying Alibaba shares. So that would be for investor that is more risk averse and you don't like too much risk. For those who like to take on more risk and don't mind volatility, then and you have the holding power, then why not go for an IPO? But please do your homework. Okay. So the next question is whether you have to convert all 250K to Hong Kong dollar to subscribe to the IPO. Yes, you have to convert everything. So imagine if you're the investor and if you really very sway, you're very unlucky, you didn't get any shares, you have 250K Sing dollar worth of Hong Kong dollar in your account. And the only way you can use it off, because you don't want to convert currency both ways, right? You have to buy some Hong Kong dollar shares. Okay. And And okay, the next question. Any suggestion how we value companies such as Ant Financial? Okay, I actually like this company. I like this question a lot. Um, Most of the time, a lot of us, what we see, are being influenced by the media. You scroll through Facebook, you see Ant Financial. You scroll through Google, you see Ant Financial. But we also need to think about who is writing the article. Is there any ulterior motive behind the people writing the article in the first place? Is it a marketing gimmick? Or is it or is it really the professional opinion? Well, with a lot of journalism these days, right, I would say the best way to value a company is with your own eyes and with your own judgment. Like what is good for me might not be good for you. So if you want to value a company such as Ant Financial, look into its parent company Alibaba, look at the S1 prospectus filing that is available online. um, Go and do a bit of background research on how the company operates. Because if you're going to be putting in 50K or 20K or 30K of hard-earned money into a stock and share, I believe that definitely some homework is due lah. You definitely need to know what you're buying. Okay. So, uh, okay, the next question: why did Beyond Meat fall after peaking? Is there some fundamental issue with the initial overvaluation? Okay, I would say that within the first 3 months, right, the prices went up because of the hype. There was a lot of hype, a lot of speculation. So because of all this speculation involved, eventually there'll be a cooling down period where people feel that, it's time to dump the shares. I've made enough profit. And they just want to, they want to bail, and they just want to cash out. So once a lot of investors start to cash out at the same time, it will cause a drop in the prices like this. So this is actually another I would say this is actually another this is actually what we call the stock market a pump and dump, which is at first you distort the prices to very high when the prices are very high already, and then you suddenly dump a lot of shares in the market, causing the price to crash. So it is not that there's a fundamental value, it's just because of a lot of overhype. And that is something that I want our investors to consider properly before they throw their money into the NIPO. So while we, Philip Security, we are a brokerage, definitely we operate a lot on commissions. But at the same time, we want our investors to know what they're doing and not just blindly, follow the trend. People or my friend asked me to buy, that's why I buy. Please don't do that. Do some research. Don't just look at how hyped something is. Go and take a look at the background behind the company as well. Okay. Um, Okay, the next question I'd like to answer is who trade in the pre-IPO market just between Philip clients? Yes, only our Philip Security clients are able to trade in this pre-IPO market. It's an exclusive for our valued clients, which is why we have actually planned and fought very hard to get this kind of pre-IPO placement for our company. Okay, the next question I'd like to answer is that there are two markets for IPO. Can we buy the Shanghai? Well, actually, right now, we only have the counterparty in Hong Kong that we have is the stronger one. So that is the only one that we offer at the moment. So only Hong Kong market, we don't have Shanghai. Okay, next one, observation of past few IPOs. Any useful trading tips? I would say that, even as my colleagues who are traders, some of them have invested in IPOs before, like Razer, and at first it looked good, but actually quite a few of them lost money. So even the most seasoned investors, right, can also face losses during IPOs as well. Okay, observation of past few IPO is that you have to be very careful of dumping, because people who have actually been able to subscribe to the IPO before and already have the shares, they might just suddenly let go of maybe a few thousand, tens of thousands, or even hundreds of thousands of shares in just maybe a few seconds, and that will cause a sudden drop in price. So, because the end group shares, right, a lot of them have already been bought in by private investors, or in some kind of ETF in China already. You have to be very careful about the volatility of the stock and who is holding on to the stock at the same time. Okay. Okay, next one. For the allocation of the end IPO shares, does the allocation of shares follow those announced by the company or based on Philip's discretion? Of course, this one is based on the company. We Philip, we are not big enough to actually go and decide who get the ballots or not. It's actually based entirely on N group. If let's say you are an investor that want to subscribe to the IPO, which is why I'm very careful. The terminology is called subscription of IPO. It's not called buying of the IPO. You cannot buy the IPO shares no matter how much money you have. You have to ballot. Is a luck kind of thing, and the company is the one who eventually decides and tell you, congratulations, you got it, or too bad you didn't get it. So in the past, we have many investors who were disappointed by this kind of oversubscribed IPOs, which is why we highly encourage clients, right, to use our pre-IPO market one day before to actually get your profits from there and do your trading on there, so that you don't have to incur such high startup cost of 250K, and there's actually a very low chance of you getting the share at all in the first place. Okay, the next question is, will the Ant Financial IPO available at CFD account, only at share account? Okay, the Ant Financial IPO is only available for share. It's not available for CFD. However, if let's say you would like to do CFD, you can always use Alibaba as a good counter to do the CFD. Okay. Okay, for the Alibaba shares, right, actually it's listed on two markets. One is the Hong Kong market and the other is the US market. So depending on which one you find more stable and less volatile, it's up to you which market you want to invest in. But judging at how the US election is actually putting a lot of pressure on the US market, right, the Hong Kong market might be the safer bet for now if you want to buy Alibaba shares. Okay, so that's about 3 questions down. Okay. Any idea what is the IPO price? I'm sorry, this one we are not sure. We would love to know, and once we know, definitely we'll let you know. But this is something that this is data that we do not have. Okay, for the Alibaba stock that will for end October to buy in again. Okay, as I said before, right, you need to do a bit of market analysis. Right now, I would say that Alibaba stocks is not a good time to buy yet because it's almost approaching 300. So I would advise you to wait for the price to drop a bit, maybe about 290, 280 before you actually enter the market. So it's actually so again, when you buy in, right, you have to think about you want to hold until when. You want to hold until the IPO come out, or you want to hold until IPO come out and then then a few more months. So if you have actually gotten the Alibaba stocks for cheap at first a few weeks back, then definitely keeping it will be a good idea because there's a lot of more growth opportunities for this stock. It will definitely cross the $300 threshold once the NIPO is launched. Okay. Okay, for NIPO, I think it's not. I think there's too much investors, big time investors who put money into this for it to fail. WeWork didn't happen, right? Because first of all, I would say there's a huge loss of investor confidence. So judging from the way things are now, I would say it's very unlikely for Ant Group IPO to fail unless some huge news of something dysfunctional or something very bad going on with the shares. Okay, for the Hong Kong shares pre-IPO minimum amount, there's actually no minimum. So even if you $1,000, $400 also can buy, as long as you purchase at least 100 of the lot size. Oh, sorry, correction. For the pre-IPO, we are not sure of the lot size yet. We will let you know once the market is open. Okay. Okay, which Baba share listed is more volatile? The US one is definitely more volatile. Once Trump got COVID, it plunged very badly. Then once he came out of the hospital, then it goes up very high. So if you want more volatility, want to play CFDs, then definitely US market is the one to go. Okay, in the Hong Kong pre-IPO, if can buy or sell shares, does seller need to own any share? No. That means you can just enter the pre-IPO without any shares, and you are guaranteed to get the shares bought, provided that you bid at a price where your offer is matched by a sell offer. Yes, you may use the cash account to trade on the pre-IPO as well, but that one will incur higher brokerage costs. So, and you also need money inside the account. If you want to find out about the IPO, right, the pre-IPO, you can just Google POEMS Hong Kong pre-IPO. It should come up straight away. I think over here, I'm not sure if you're talking about the cash account or the cash management account. For the cash account, you need cash inside to buy. Cash management account is actually more suitable for clients who want to do only Singapore shares that they want to put in the CDP, and it occurs very high brokerage. So if let's say you only have a cash management account and you want to do the Hong Kong pre-IPO, it's highly recommended to go and open a cash plus account. Okay. Okay, is the shares bought in pre-IPO the same as the shares bought in actual IPO? What is the price per share for Ant Group? Okay, this one, right, it really depends on the demand and supply on the day. Like as you can see for Beyond Meat, at first the IPO was $25 per share. Once market open, grew up twice to $48 already. So people who actually managed to subscribe to the IPO might have bought it at a much cheaper price. But the moment the market open for an IPO, right, the price might increase, might double or triple depending on what kind of demand it is. Okay. So okay. So okay, would it be safer to buy an IPO on the secondary market after it has been listed? Well, there's actually a few factors. On the pre-IPO day, right, you can see that there is a less pool of investors vying for a pool of shares. So in a sense, there is less demand as you would expect from the open market on the second day. So if let's say there is less demand and less competition, then prices might be lower. But then again, on the day itself, there always be chances of private investors actually dumping a lot of shares, down, and will actually cause the price to decrease. So a lot of things can happen on the day. We really can't tell. Like you see, Beyond Meat first day, it can triple in value, but we look at SoftBank, right? It actually dropped. So if let's say you're an investor and you actually bought both shares, it actually give you very opposing kind of results. Okay, the next one is the IPO application be spread out to all applicants or balloting if overwhelming application does apply for larger amount relate to higher chance or larger allocation? Well, sadly, no. Doesn't mean that you want to buy more, then you get higher chance. It doesn't work like BTO, sadly. Okay, so IPO application is open to everyone. So let's say there's 1 million investors who want to buy the IPO, there'll be 1 million people maybe vying for that 100 or 1,000 ballots. So it's actually very, I would say that the chance to get the IPO subscription is very bleak, even you have the money. Is this recorded? Okay, yeah. And the next question is that this webinar, yes, is recorded and available for replay. So if let's say you want to revisit some of the case studies that we go through, feel free to go and take a look at it again. Yes, so the percentage for Alibaba asset, right, is about 33% in Ant Financial. So it's actually quite a big stake. Okay, there's no additional fees and charges in participating in the Ant IPO. Okay, but so all the brokerage charges are exactly the same as what you would expect when you buy normal Hong Kong shares. Okay, so I'd like to amend that. There might be some charges to participate in the Ant IPO. There'll be more information given on the website. Yes, you can buy Hong Kong pre-IPO in a Cash Plus account. That is definitely one of the most recommended ways to go because the brokerage is the lowest for you. Okay, pre-IPO price is higher. Okay, if one owns Alibaba share in the US market, what happens if Alibaba requires to delist from the US in future? Yes, you can transfer your shares over to the Hong Kong exchange, but there will be charges involved. Okay, so normally, okay, normally pre-IPO price is higher than IPO price. Okay, this part we really can't say. It depends on the demand and supply of the day itself. Chances that you get the order at 9 a.m. on the Android IPO, that one probably about the chance you can strike Toto. Pre-IPO have different price offer. Okay, the way that the pre-IPO price is based on is pure demand and supply. It depends on how many people are willing to sell that amount of shares in that price. So if let's say the market buy price is let's say $80, if you want to confirm plus choke buy the share, right, it'll be better maybe you put $81. You know, that is a way that you can confirm definitely get the share is to put a price above the market value. Okay, when is an IPO going public? Hopefully in the next 2 to 3 weeks. I'm also looking forward to it as well. Okay, who will be the sellers on the pre-IPO trades? Okay, the sellers are actually the private investors who have actually put their money and invested in an IPO before it went public. So normally when the company first start up, there'll definitely be private investors who put the money in. So when the company goes for IPO, right, definitely these investors will get quite a lot of shares. So when the IPO comes out, they actually have the liberty of selling their shares on the pre-IPO market or the IPO. They actually have the liberty of selling the pre-IPO market or the open market or the secondary as well. It's actually up to them. Okay, so definitely you can hold the shares you bought after pre-IPO. You can actually hold them for long term or short term. It depends on you how long you want to hold the shares for. Okay. How is the price in the Hong Kong pre-market demand? Is it based on okay, the demand and supply for the pre-IPO market, right, is actually depending on all the pre-IPO invest in the investors. So it's not only Philips clients who actually be participating in the IPO. There will also be maybe brokerages overseas that actually manage to get a share, manage to get an how do I say, manage to get access to IPO as well. So it will be open to certain selected brokerages overseas as well, and that will be the market that will form the pre-IPO. Okay, but for our own Philips, for our own Philips IPO, right, it's actually our own shares traded among our own clients. Okay. Yes, definitely you can use some cash management to trade the Hong Kong pre-IPO, just that you incur higher brokerage costs. Okay, the prospectus and the past financial report and financial, you can just Google. You can Google and financial prospectus and financial report. You know, it definitely will come out in the first few of your Google search. Okay, pre-IPO don't need balloting. Only the IPO need balloting, which means the pre-IPO is you buy, confirm, will get once the trade is fulfilled. Your trade might be partially fulfilled, rejected, or fully fulfilled. If let's say you are too far along the queue, maybe the price you put too low, then your order will be rejected, just like a normal share. If let's say you the market price is $80, you put submit your order for 1,000 shares for $80, but maybe only half of your order is fulfilled. That's called partial fulfillment, depending on the market and supply, demand and supply conditions. Okay, any end group shares bought is confirmed. Once the order is fulfilled, the shares belong to you and you can hold as long as you like. Okay, for Okay, for Alibaba research from Philip, right, you can actually go. We have a lot of articles regarding the Alibaba research. There's actually also another seminar tomorrow regarding our Hong Kong and emerging market. And financial is going to be a hot topic tomorrow as well. The seminar tomorrow is 7:30, 7:30 as well. So yeah, you can tune in. The webinar's name is the emergence of the China and Hong Kong economy. You can find out more in our website. Okay, the likelihood that Alibaba Hong Kong share will reach US share price. Okay, they're in entirely different markets and they also have different currencies. So you can see that the fluctuations might be the same because they are very highly correlated. But the US Baba shares are definitely more susceptible to the US political situations. And also the because of different exchange, right, it operates a different timing. So the US market, it actually opens only at night, which is right now it doesn't open at daytime. In the daytime only the Hong Kong market is open. Okay, what is the risk for Hong Kong pre-IPO? I would say that the risk for Hong Kong pre-IPO is the volatility, and you do not know how expensive or how cheap the shares are going to be. Okay. Okay, the date for pre-IPO eligibility for PRO members. So as long as in PRO's account, on the day that the pre-IPO is launched, you can just log in and trade on the pre-IPO market as if it's a normal share. So if you want to participate, it's very simple. Just have an account. When we announce the pre-IPO date, you can log in during the specific time frame that the Hong Kong market opens, and you'll be able to trade the Ant Financial pre-IPO. Okay, for the trading hours for pre-IPO market, right, you can actually look at our one of our on our website. There's actually a half day or full day session. So if let's say it's a half day session, right, then the hours will be it will be earlier. If it's a full day session, it will be about 4 plus if I'm not wrong. But all the information are available on our website. Just Google Poems Hong Kong IPO, Hong Kong pre-IPO. Okay, because we're coming to 9 o'clock already, so due to time constraint, we'll be just answering about 2 more questions. Okay. Uh, okay, if for the last second last question, if you bought the pre-IPO and you want to sell, right, on the pre-IPO day, right, you'll be selling on the pre-IPO market. If you do not want to sell on the pre-IPO date, you can always sell the next day on the normal market. Okay, so it's actually up to you whether you want to sell on the day itself or you want to hold it for long term and sell it through the normal market. Okay. If you would like to know the Hong Kong currency exchange rate at the time, you can go under account management inside your Poems account, go under announcements. It will reflect the currency rates for the day. You do not need to call in a broker to fix the exchange rate. Okay, as I said before, there's actually also an option for you to do the settlement in Sing dollar as well. So for clients that you find that it's too hassle to go and convert your money here and there, you can always do the settlement in Sing dollar and everything will be settled in Sing dollar. There will be no dual currency to make matters more confusing for you lah. Okay, so I think that's about it. I hope I've answered most of your questions. If you still have any questions, feel free to email in to either tq_team@philip.com.sg or my personal email, personal work mail at athena_meow_yy@philip.com.sg. Okay. Um, and okay, so that I can okay, once again, I thank everyone for their time tonight. I know it's very late and it's a Monday night, but then again, if you're interested in knowing more about the N Group IPO and the Hong Kong market and China market, tomorrow 7:30, another one of my colleagues, Wan Xing, she's holding a seminar on that as well. She's actually a lot more, uh, uh, she has a lot more insights than me when it comes to the China market. So definitely, it's going to be a very interesting seminar as well. Okay, so I guess we'll end here for today. Thank you for your time. I hope that everyone has benefited from the session. And again, more of the story. Please do your homework first before you put any money in stocks. Um, the last thing we want here at Philip Capital is for our investors to blindly invest because of this person says that person says that, and in the end, you end up burning your wallet and you end up burning a lot of your funds. Okay. All right. That's all for today. Thank you. Bye bye.